A very good morning to you, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at the half-year results of NGL, or Trinidad and Tobago NGL Limited, which has done fairly well, or quite well actually, compared to its prior comparable period. We also take a look at One Caribbean Media and their results for the half-year period, being one of the stocks that have been included in that portfolio for the National Investment Fund bond offering. And in case you missed it, the NIF bond offering closes in terms of subscriptions on August 9th. That's this Tuesday. So if you haven't already made your subscription as yet, you should be visiting your broker sometime this week. Let's get straight into NGL. And for the period ended June 2018, NGL reported earnings per share of just around 83 cents, a very impressive 40.7% increase from the 59 cents earned in the prior comparable period. Driving this performance, of course, was its share of profits from Phoenix Park Gas Processors Limited, or PPGPL, which was up from 92.7 to just around $128.5 million overall. And dividends per share in its most recently declared interim dividend was at 50 cents, which is exactly the same as was declared in the prior comparable period in 2017. Now, what's been driving this performance? Well, of course, it's the 39% shareholding in PPGPL. And as we peel back the layers a bit to look at what would have impacted the performance of Phoenix Park itself, we can see it's twofold. One, in terms of improved product pricing, and secondly, in terms of improved volume. So firstly, let's take a look at the pricing story. And in terms of price movements, we can see that there has been a broadly positive trend in the prices of the natural gas liquids that are processed and sold. That is natural gasoline, propane, and butane. And in the case of propane, it moved from 70 to 93 cents. That's an over 30% increase. Similar story with natural gasoline, over a 30% increase, currently at $1.56 per gallon. And butane would have increased just over around 10% as well on a year-to-date basis. So a nice upward trend in prices, and of course this would have helped in terms of the profitability for PPGPL. As we take a look at the volume story or export story, another positive note, total exports of NGLs from Phoenix Park, which is the stock that Trinidad and Tobago Natural Gas NGL Limited holds, increased from 3.4 million barrels for the January to May 2017 period to 3.6 million barrels to the January to May 2018 period, an almost 6% increase. Natural gasoline exports increased from 1.28 million barrels to 1.6 million barrels, a 25% increase period on period, while propane increased or decreased marginally, just around 2.2%, and butane decreased just around 12%, but an overall increase in the total exports of NGLs. So improvements in pricing and volumes exported would have contributed to an overall increase in share of profits. And here we can see from the 2016 period, half year, going straight up to the most recent half year 2018 period, there's been a nice upward trend from just around $73.5 million in HY 2016 to the current level of $128.5 million in HY 2018. So at a price of $29.69, Phoenix Park, TTNGL still offers investors a quite attractive dividend yield of 5.05%, which is one of the highest on the local exchange. And here we have NFM at 5.6% and Whitco at 5.18%, and above the sector or the market average of just around 3.09%. So on the basis of improving energy environment in terms of pricing, the local energy environment is improving in terms of gas production so far. And the prospect of US dollar dividends, and much would have been said about that in the chairman's address or the chairman's report at the half year, Bourse maintains its buy rating on TTNGL. And turning quickly to One Caribbean Media, for the half year ended June 2018, One Caribbean Media registered earnings per share of just around 26 cents, roughly a 25% decline from the 35 cents reported in the prior comparable period. Now, dividends per share also, in its most recent declaration, declined from 49 cents to 40 cents per share, or roughly an 18% decline. Now, things could be better for OCM in an environment that is changing with continuing competitive pressures, differences in terms of how people advertise, And overall, we can see that trend being reflected in the profit after tax of OCM, where profit after taxes have fallen from just around 35.5 million in half year 2014 to its current level of 20.4 million in 2018. And the profitability ratio in terms of its profit margin after tax, or PAT margin, has also declined, meaning that for every dollar of revenues generated there, the OCM is delivering less in terms of profit as a percentage of that. So on the basis of declining profits, but tempered by a very sharp decline in prices over the past 12 to 18 months, Bourse maintains a neutral, or changes its rating rather, from a sell to a neutral on OCM. And that's really because of the more attractive dividend yield in spite of the decreased dividends that is offering. That's it for this week's edition. For more information, give us a call at 226-8773. Visit our website at bourseinvestment.com or email us at invest@boursefinancial.com. Have yourselves a great investing week. This has been the Bourse Report.